You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back to Web3 Wednesdays on The Vocal Technologist. Today we're exploring some really fascinating intersections between crypto and traditional finance. Things are moving fast, maybe faster than ever.
Absolutely. The pace of innovation is just incredible. And some of these convergences, well, they have pretty significant implications for everyone involved in finance, right?
Exactly. Let's start with something big. Corporate Ethereum holdings. It's kind of staggering when you look at the numbers.
It really is. What are we seeing there?
Well, get this. Over $17.6 billion worth of ETH is now held by just 69 entities. That's about 4.1 million ETH.
Wow. In public companies.
Public companies account for a huge chunk of that, almost $11 billion.
Hmm.
We're talking names like Bitmine Immersion with 1.5 million ETH, SharpLink Gaming holding around 740,000 ETH.
So this isn't just, a few tech companies dipping their toes in. It's becoming a serious treasury strategy.
It seems like it. It definitely signals a kind of maturation, moving beyond just pure speculation.
Yeah, but it also brings up risks, doesn't it? Regulatory uncertainty is still a big one. Volatility, liquidity. These aren't trivial challenges for a corporate treasurer.
Good point. It's not all smooth sailing.
Not at all. Look at Bitcoin, maybe $428 billion held across institutions. But MicroStrategy holds 64% of the public company stash? That's concentration risk right there.
True. And speaking of different approaches, did you see that Ming-Xing Group deal in Hong Kong?
The $483 million Bitcoin acquisition? Yes, using convertible notes and stock warrants instead of cash.
Pretty creative financing, right?
Yep.
Avoids draining cash reserves.
Incredibly creative. It shows real conviction in Bitcoin, but also, maybe a need to manage cash flow carefully. Their stock jumped 30%, though.
It did. It's a bold move. But it does raise questions about relying on that kind of financing for crypto buys. What are the potential downsides?
That's a key question. It adds layers of complexity, potential dilution for existing shareholders if warrants are exercised or notes convert. It's definitely not risk-free for the company or maybe even the market if it becomes a trend.
Okay, let's shift gears slightly. Stablecoins. They're getting smarter, more integrated.
Oh, definitely. What's caught your eye?
MetaMask launching mUSD later this year. You know MetaMask? Over 100 million users.
Yeah, huge user base. So what's special about mUSD?
It's fully backed, issued by Bridge, which is owned by Stripe, and it's powered by this M0 protocol. The interesting part, it's designed to generate yield from its backing, like cash and treasuries.
Ah, so a yield-bearing stablecoin, native to the wallet.
Exactly. Imagine it integrating across everything you do in MetaMask swaps, bridging, maybe even spending with their card. It's like upgrading your digital wallet's financial engine.
That's pretty compelling. And then there's Wyoming.
Right. The Frontier Stable Token, FRNT. This is genuinely groundbreaking.
The first U.S. state-issued stablecoin.
Yep. And get this. Statutorily mandated 102% reserve, backed by T-bills and USD.
Okay, 102% reserve is serious. But what's the real kicker?
It integrates with Visa, potentially usable anywhere Visa's accepted. Think Apple Pay, Google Pay.
Wow, okay, hold on. So you could get your tax refund as FRNT and spend it instantly with Apple Pay.
That's the potential. It builds on Wyoming's whole history, right? They've passed over 45 digital asset laws.
They've certainly been proactive. So the big question is, how fast will other states jump on this? Programmable tax refunds, social benefits.
It could completely change how government distributes funds. And we're seeing other moves too, like Tether's gold-backed token, XAUT, come into Aave3.
So you can earn yield on tokenized gold or borrow against it, expanding gold's utility in DeFi.
Exactly, beyond just holding it. But for someone less familiar, what does putting XAUT on Aave really unlock? Is it more than just yield?
Well, it fundamentally makes gold a more active, composable asset within the DeFi ecosystem. You can use it as collateral for loans, participate in lending markets. It's not just sitting in a vault, digitally or physically. It becomes part of the active crypto economy.
Makes sense. So with all this innovation, where's the next big narrative? Meme coins seem to be cooling off. Daily active addresses hit some recent lows, around 124,000.
Yeah, the frenzy seems to be fading a bit.
The new buzz seems to be tokenized startups, trying to bridge that gap between the massive private equity market, like $13 trillion, and crypto's need for real-world assets.
That's a really interesting idea, providing liquidity for early-stage companies.
Immediate liquidity.
Yeah.
But surely there are regulatory hurdles. Democratizing private equity access sounds great, but it's complicated, right?
Right, absolutely. Regulation is the key challenge. But the advantages are clear. Founders get capital, wider distribution. Investors, they get liquid exposure to businesses they normally couldn't touch.
So you see it evolving in stages.
Yeah, maybe 3 phases, starting with non-security tokens, then moving to tokenizing mid-cap pre-IPO companies, eventually maybe even large private firms. It's crypto trying to tap into that huge private equity pool.
And speaking of innovation, look at Athena's USD.
Exploding supply, right. Over $11 billion. Fastest USD asset to hit $10 billion, now the 3rd largest stablecoin.
What's driving that insane growth?
A few things, but one interesting mechanism is their protocol token buybacks. They're using revenue to buy back their own tokens, almost $40 million weekly recently.
So like a corporate share buyback.
Exactly, mimicking traditional finance strategies to reduce supply and potentially boost value within their ecosystem.
Fascinating comparison. Okay, last thought. The Bitcoin 4-year cycle. Is it still the dominant pattern, or are things different now?
That's the million-dollar question, isn't it? Or maybe the billion-dollar question now.
Probably. We're not seeing that same crazy retail hype as previous peaks, but stablecoin supply keeps growing, and we have new players, ETFs, pension funds.
Right. Those new demand sources didn't exist before. Plus, you have more institutional participation, maybe clearer regulations coming, even things like shifts at the Fed. All that could potentially smooth out the sharp peaks and troughs.
So maybe an extended cycle, stretching into 2026 perhaps.
It's definitely possible. It raises an important point. Maybe trying to perfectly time the absolute top is, well, a fool's errand.
Always has been, hasn't it?
Pretty much. Perhaps the smarter approach now is focusing on systematic exit strategies. You know, having a plan, rules for taking profit, rather than just reacting emotionally. And keep a close eye on metrics like stablecoin growth. That's like the dry powder waiting on the sidelines.
A much more disciplined approach. Well, what an amazing journey through the crypto space today, right here on The Vocal Technologist. From big institutions piling into ETH, to state-issued stablecoins, to tokenizing startups. It's a lot to digest.
It really is. And if you step back and look at the bigger picture, all these shifts suggest we're fundamentally redefining financial tools and how markets work.
So the question for you, our listener, is how will these changes impact your view of ownership, of opportunity, as this continues to unfold? Lots to think about.
Spoken Tech for your ears.